Have you ever wondered how people make money from the financial markets? Every single day, millions of traders around the world buy and sell assets, hoping to make a profit. But here's the truth. Most beginners lose money, not because trading is impossible, but because they start without understanding the basics. Trading is not a get-rich-quick scheme. It's a skill that requires knowledge, patience, and discipline. Just like becoming a doctor, engineer, or athlete takes time, becoming a successful trader also requires learning the fundamentals first. In this video, I'll explain trading from absolute scratch. By the end of this lesson, you'll understand what trading is, how it works, why prices move, and why millions of people choose trading as a career or an additional source of income. So, if you're completely new to trading, this is the perfect place to start. Let's dive in. Let's start with the most basic question. What exactly is trading? Trading is the process of buying and selling financial assets with the goal of making a profit from changes in their prices. Think about a simple real-life example. Imagine you buy a smartphone during a big sale for $500. A month later, the demand for that phone increases, and someone is willing to buy it from you for $600. If you sell it, you've earned a profit of $100. Financial trading works in exactly the same way. Instead of buying and selling phones or other physical products, traders buy and sell assets like company stocks, cryptocurrencies, currencies, or commodities. The objective is simple: buy an asset at a lower price and sell it at a higher price. In some financial markets, traders can even make money when prices fall by selling first and buying later. At its core, trading is simply taking advantage of price movements. Every trade begins with a decision, whether the price is likely to go up or down. The better you understand the market, the better your decisions become. This is why learning the basics is the first and most important step before risking any real money. Now that you understand what trading is, the next question is, why do prices move? Many beginners think that prices move randomly, but that's not true. Every price movement happens because of one simple concept: supply and demand. Imagine there's a brand new smartphone that everyone wants to buy. Since many people are trying to get it, the demand increases. When demand becomes higher than supply, the price naturally goes up. Now imagine the opposite. A company releases a product that nobody wants. More people start selling it than buying it. This increases supply, and the price begins to fall. The financial markets work in exactly the same way. Every second, thousands of buyers and sellers place orders in the market. When buyers become stronger than sellers, the price moves higher. When sellers become stronger than buyers, the price moves lower. This constant battle between buyers and sellers creates every single candlestick you see on a trading chart. A green candlestick usually means buyers were stronger during that period, pushing the price upward. A red candlestick usually means sellers took control and pushed the price downward. As a trader, your job is not to predict the future perfectly. Your job is to understand who is currently in control, the buyers or the sellers, and make decisions based on that information. This simple concept of supply and demand is the foundation of every trading strategy you'll learn in the future. Whether you trade stocks, Forex, cryptocurrency, or commodities, every market follows this same principle. Now that you understand why prices move, let's talk about what you can actually trade. One of the biggest misconceptions among beginners is that trading is only about stocks. In reality, there are several financial markets, and each one offers different opportunities. The first and most popular market is the stock market. In the stock market, you buy and sell shares of companies. When you purchase a stock, you're buying a small ownership in that company. If the company's value grows, the stock price usually increases, giving traders and investors an opportunity to make a profit. The second market is the Forex market, also known as the foreign exchange market. This is where currencies are traded against each other. For example, traders buy and sell currency pairs like euro to US dollar, pound sterling to US dollar, or US dollar to Japanese yen. The Forex market is the largest financial market in the world, with trillions of dollars traded every single day. The third market is the cryptocurrency market. This market includes digital assets such as Bitcoin, Ethereum, Solana, and many others. Unlike traditional markets, the cryptocurrency market operates 24 hours a day, 7 days a week, making it one of the most active markets in the world. The fourth market is the commodities market. Commodities include physical assets like gold, silver, crude oil, natural gas, and agricultural products. These assets are influenced by global demand, supply, economic conditions, and geopolitical events. Although these markets may look different, they all follow the same principle. Prices move because buyers and sellers interact every second. Once you understand how price movement works, you can apply the same knowledge to almost any financial market. The only difference is the asset you're trading, not the logic behind trading itself. One of the biggest myths about trading is that it's nothing more than gambling. You've probably heard people say, trading is just like going to a casino. But is that really true? The answer is no, at least not when trading is done professionally. Let's understand the difference. In gambling, your results mostly depend on luck. You place a bet, and you hope for a favorable outcome. You have very little control over what happens next. Professional trading is completely different. Successful traders don't rely on luck. They study the market, analyze price action, manage their risk, and follow a trading plan before entering any trade. Imagine two people entering the same trade. The first person clicks the buy button because they saw someone on social media saying the price will go up. The second person spends time analyzing the chart, identifies a high probability setup, calculates the risk, and only then enters the trade. Both traders may win or lose that single trade. But over hundreds of trades, the disciplined trader has a much higher chance of being consistently profitable. That's because trading is a game of probabilities, not certainty. Even professional traders lose trades. The difference is that they keep their losses small and allow their winning trades to grow. This is where risk management becomes so important. A professional trader doesn't ask, how much money can I make? Instead, they ask, how much money am I willing to lose if I'm wrong? That mindset separates professionals from beginners. So is trading gambling? If you trade without knowledge, without a strategy, and without risk management, then yes, it becomes gambling. But if you trade with education, discipline, patience, and a well-tested plan, trading becomes a skill that can improve over time, just like any other profession. Congratulations! You've just completed the very first lesson of this trading course. Today, you learn what trading is, why prices move, the different financial markets you can trade, and why professional trading is completely different from gambling. Remember, every successful trader was once a complete beginner. The only difference is that they stayed consistent, kept learning, and never stopped improving. Don't worry if everything doesn't make perfect sense yet. Trading is a journey, and we'll build your knowledge step by step. In the next lesson, we'll explore the 4 main types of trading: scalping, day trading, swing trading, and position trading. You'll learn how each style works, its advantages and disadvantages, and which one is the best choice for beginners. So, if you don't want to miss the next lesson, make sure to subscribe and turn on notifications. If you found this video helpful, leave a like and share it with someone who wants to learn trading from scratch. Thank you so much for watching, and I'll see you in the next lesson.